Right, welcome back again for another stream, another day. The date, right, so the date today is the 25th of the second month, February 2026. As you know, it's currently Wednesday, midweek. So let's see what NASDAQ has to offer for today's trading. From the daily time frame, if you look at the daily, really and truly, I'm no longer leaning on the bearish side, right? That's happening here now. Potentially could be a shift in market structure to see higher prices. But if you look from here, this remember we had this in yellow marked out from last week or 2 weeks ago. We had this volume imbalance here marked out. You can see price banging it a couple times last week, and that is what we're using as a means to trade higher, right? So that is the catalyst or the origination of that price running higher right here. So now what I'm looking at is this area that I have in gray here, which is actually a 4 hour, right? A 4 hour fair value gap resting here. So that's my first target for today's session. And let's see if we can get that. Because from the daily time frame, I don't really have anything mapped out here in the daily. On the daily here, nothing, right? To really see targets other than the buy side here and so forth. So for low hanging fruit, I'm using that 4 hour fair value gap resting here. And then this, we want to see this, which is the daily fair value gap, become an inversion gap, where it support price to the downside. So that is what I'm looking at, and my draw liquidity is this right here. Down to the 1 hour. Not much, but again, we're still in here, that fair value gap. Once we could get that, I would be done for the trading day. 15 minutes. At the same time, you can see we have some really nice sales liquidity, like rather nice sales liquidity. So we want to just pay attention to price actually and see where they want to take price. But from pre-market, they leave some really, really nice, relatively equal lows in price. Like these lows here, they look really nice to be purged. So we want to see if price could want to reach down there or not. And then we have some equal lows in here again. So we just want to observe price and see where they take price thereafter. Even here we have some relatively equal lows from Tuesday. We have some nice lows resting here. So all these is levels that we'll pay attention to. Let me just go ahead and mark up my midnight open so we can get premium and discount. So Wednesday midnight open. So midnight open would be resting right here. So midnight open would be here. And we have the opening bell in just a couple minutes. So we want to see how that opens. And then we'll also mark up our 8:30 open and see where price is trading currently. So 8:30 open. Again, we have no news drivers today as well. So let's see where they take price and what happens at 9:30. Right, so currently we're in a premium market. As you know, if you want to be a seller, you want to sell above midnight open and above the 8:30 open. That gain you the best premium price. Well, let's see if we really shift to a bullish narrative, then it's not even necessary for price to trade back below the midnight open. So let's see what happens here at the opening bell in just a couple of minutes, and we'll go on the regular trading hours, and we'll have our opening bell annotated once it happens. So let's just see what happens in the next couple of minutes of trading. We have the opening bell up in about a minute and some seconds. So let's just wait for the opening bell. right? So we have the opening bell in a couple seconds. So let's see what size of a gap that we get here, and that will determine what our expectation is for this trading session. So we have the opening bell, so we have a discount gap. So as you know, for the first 30 minutes, our bias would be bearish with a potential retrace back to consequent encroachment of the opening range gap. Again, if we are really bullish, then we don't expect to see such a retracement, and price could continue trading to the direction that it opened, which is bullish. But still, we will annotate it for the potential that we couldn't see a retracement. Alright, so you can see prices press higher. And again, I'm expecting bullish prices, to be honest. I'm not bearish. And my target is that blue area here, which is the 4 hour. And you can see we're getting some volatility here at the open. So let's see how that happens and what happens thereafter. Alright, so let's see if price can continue higher. Right, so you can see how large the range is getting here. Alright, like this gap alone, you can see how big it is, almost 50 points. So let's just wait here and see what happens. So price traded inside of this gap here. Let's see what happens here. Again, I won't enter here because that is just too big of a gap to risk my money on. So on the right is my micro contract, on the left is the full mini contract. So I'm looking at this down close candle here, and it could be used as an order block. So I'm expecting initially for that large fair value gap to act as a breakaway gap. And I would actually enter. So I'm watching the down close candle, this down close candle here, seeing if it would act as an order block to send price higher. So I buy there actually, but trading if you have a lag, that's why you not see it coming up as yet. Again, I'm on paper trading for now. Trading view has a crazy lag, but I did enter in buys here inside of this outer block right here. This area that I annotated in purple, I did enter on this down close candle. So you see no popped up, and I will put my stop loss just below this low right here and take profit. We would aim for our target. So this is a more on a high end risk with the narrative that price can continue trading higher. That is what I entered here by using this down up close candle. If we're bullish, then you want to see up down close candle support price to the upside. So that's why I entered on that drop down into this down close candle here, using it as a bullish order block and wanting to see that fair value gap remain open and be treated as a breakaway gap. So let's just see here. Let's see what other potential targets that we can look at actually. So here, instead of taking full take profit, I would aim to take partial at that fair value gap instead. So I would take 3 contracts off at that fair value gap. So I would take partial at that fair value gap instead of collapsing the trade entirely. Because if we're bullish, then, and that's a shift in market structure from a daily time frame, then I do expect to see price start trading much higher beyond the target that we had in mind of the 4-hour fair value gap, which is this gap right here. If that's the case, we can see price trade all the way above these highs here. 4H. Right? So that's these highs resting here. But I would take a partial at this fair value gap here. Well, let's see here. Or what we can do, we can measure the projections of the opening range gap and use these as our targets as well, which I think I would do instead to get my targets. So the opening range gap on the micro, I think I could use that to get my targets instead. So from the close to the open, we'll do that and we'll get the projections. And let's see if price would continue trading higher. And again, I would take a partial off at the 4-hour fair value gap. I would take 3 contracts off. And then I can aim for 1.5 standard deviation for my full take profit. Even though price can trade much more, that's where we'll aim to get out of the position. So let's see here if we can get that. Let's see if an immediate rebalance can happen here. And we get partial taken. Once partial is taken, then you know the rule. We won't turn a winning trade into a losing trade. So we would move our stop in profit or at break even after taking a partial. So let's see here if we can get that hit. Right, and there we go. So partial taken and stop would go to break even. So we secure partial, and now we won't allow a losing trade, a winning trade to turn into a loss. So the worst thing that could happen here is we get break even, but I already took a partial off. And now here, to be honest, I want to see price start displacing higher, right? Because we have an immediate rebalance happening here. After immediate rebalance, you want to see the next candle or the candle after start displacing to the upside. And again, my bias pretty much shift to bullish, but don't take away from the fact that we have a opening range gap that's pretty large. And as you know, there's 70% chance that price can trade into the consequent encroachment in the first 30 minutes. But if price is bullish and we interested in trading higher, then for sure we would leave the opening range gap unfilled. But already take partials and stop at break even. So the worst thing that could happen here, as I said, is we get stop at break even. So let's just see here. I would take actually another partial at the standard -1 deviation at the opening range gap, and then I would leave the rest for the 1.5 deviation. But the target already hit, which is the 4-hour, that initial target that we had already hit, and we could have paid ourselves full there. But I do think price can trade much higher. So let's see if we can get that offered. If not, then we get stop or break even, and that would be the end of the day. We would just watch price and see what it does. So we have the Nasdaq contract here. You can see a little bit of difference on the Nasdaq contract. So you can see here we have 2 down close candle, and then here we only have a wick. So that is a bit weird, right? Given that they should look alike. So the kind of difference is kind of throwing me off, but still, let's see if we can get another partial taken of 2 contracts, and then we'll leave the other 3 running to full take profit. Hold on, just a moment. All right, so we should get a partial taken there now. That second partial, let's see. Let's see. But that second partial would be at standard deviation, -1, standard deviation of the opening range gap. So we didn't get it actually. It didn't get hit. But I would actually take it off. So I would sell 2 here. So next partial booked at standard 1 deviation. And my stop is in profit now. So we get it there. That's reasonable. That includes proximity regardless. So now we'll leave full take profit to -0.5 standard deviation. If we could get that, that would be it for me for today. We could go much, much higher, but I'm not really, I don't have to get the whole run to be satisfied. That alone is how much? 150 points. That is more than enough on the day. All right. So let's see if we can get take profit. We approaching the 950 macro, just about 2 minutes. Now it's 9:48. So let's see if we can get some volatility at the 950 to 1010 macro to hit full take profit. But all in all, pay ourselves twice already by taking 2 partial, and now we have 3 contracts remaining on the trade to get a full take profit of 900 and something dollars. And we already paid ourselves about 500 or about 400 something. So now I'm looking at this value gap resting right here. I want to see how price trade on this fair value gap. I like so far how we respect it. Right. So this fair value gap here that I annotated in the purple, as mentioned, we wanted to see how price trade on it, and so far we respect it rather nicely. So let's see if that can be a catalyst to send price in our full take profit and to secure the 900 and something bucks. So far, it's really, really nice trade. Midweek, just by that trade alone, we could end the entire week. But so far, if we get full take profit, 150 points, we already secured 2 partials, about 500, 400 bucks. So let's see if we can get full take profit here of 900 and something dollars. But all in all, we will just manage the trade until whatever happens. Stop within profit or full take profit hit. Oui, you can say, right. So far really nice. So I would roll my stop up even more actually. So now we secure the worst thing that could happen. We end the trade, get stopped in 400 and something bucks. Plus we already take two partials. So you might maybe looking at about close to 900, 1,000 if we get stopped in profit here, but we're in close proximity to take profit, just about 30 something points away, and I roll my stop up to this low here because I don't expect price to come back here. But again, if it do come back here, then we will be done for the day. We'll just call it a day. But let's see what happens here. Let's see if that immediate rebalance would actually be forming right here. Immediate rebalance. Let's see if that would form here or not. If it do form, then you know we want to see some aggressive up close candle. Alright, so we didn't get the immediate rebalance. But I would look at this up close candle here, down close candle, sorry, in yellow. Let's see if price can remain above this. But so far, nice low resistance liquidity run, and institutional order flow is definitely bullish because you can see down close candles supporting price and gaps being left open. That's low resistance liquidity run, and a market showing us that it's willing to trade much higher. So that's why if we're really bullish, then you should see this yellow area here support price and send it higher. But again, we're already in a premium market. This area here, smart money is trying to take profits. So seeing a retracement slightly is not bad as well. But preferably I want to see this down close candle support price and send price higher into the take profit of the 1.5 standard deviation of the opening range gap. And we also inside of the macro. So the time currently is 9:54. So we're about 4 minutes in the macro. So it's reasonable to start seeing some form of spooling. So let's see what happens here. Again, my stop rule to profit to lock in almost 465 bucks. So if I get stop here, I'm okay because I catch majority of the move so far. So if I get stop here, I'm okay. And yeah, that would be the string for today trading. But price came back and tapped into this value gap here. All right, so I like how price came back and touched this fair value gap. And if you look at the yellow area, I like how price also closed with the bodies of the candle above that yellow area here. That is really nice to see. And that is showing me that the body is telling the story and the wicks doing the damage. That's what we like to see. And the body so far is telling us that it's willing to go much higher as it's closing above that yellow area, which is this down close candle, which is an outer block that should support price if we're bullish. So the fact that price didn't have the strength to close with the bodies lower, but instead wick into it, and the wick do the damage by reaching into this fair value gap here another time. So that act as a reclaim fair value gap when you come back a second time. A second time in a bullish market, then we want to see exactly what happened here now, where price is running away from it quick. And again, I like the signatures that the bodies is telling me right here, as we stay above with the bodies closing on a closing basis above the yellow area. So I want to see here take profit get hit now. So let's see here. So let's see if we can get take profit hit or not. What I would look at is the inversion fair value gap resting right here. And so far, price trade down into it rather nicely and running away. So that is also an inversion fair value gap, and also this two down close candle would act as a order block or a propulsion block because it's inside of an order block. So that one could be a propulsion block or even an order block. But an order block instead of an order block, that would be a propulsion block, and we want to see it take price higher. And if you go down into the lower time frame, like the 30 seconds, the 15, right here should also be a breaker block. These two down close candle here. Up close should also be a breaker block. You have a low here, a high, a low, and then a high. So this area here should act as a form of support on price to send it higher if we are bullish. So let's see if we would get that and run into our final take profit with the 1.5 standard deviation. So I'll roll my stop up even more because we shouldn't break that area. So the worst thing that could happen, again, we just get stop in profit rather nicely to secure pretty much most of the move. So let's see if we can get our full take profit here. So my stop loss is just under the inversion gap plus this value gap here, plus these two down close candle. So okay, getting stop out here. Again, we already secured most of the trade, and we get pretty much the majority of the run higher from all the way after a couple of minutes after 9. So here is places that we can start taking profit. So getting stop here would be okay with me because I already paid myself once here of 3 contracts, paid myself here of 2 contracts. So we paid ourselves of 5 contracts already. So yeah, what happens thereafter? Take profit or get stop in profit. We satisfied on the day. So let's see if we can take profit. Let's see if we could end our trading day before 10:30. Right, so we get stop out here in profit, and pretty much, as you know, that would be it for today. But so far, really nice trade. We get most of it. We get most of the best of it from all the way here to being stop out right here. That's just about close to 100 points. So I'm satisfied with this, and that would be the end of the trade. If I just to give a quick rundown of the trade. So from the daily time frame, if you can go on the daily, definitely you can see that daily pretty much not indication of something bearish or lower prices. So I was expecting price to trade much lower. My first target, however, was this 4-hour fair value gap resting right here in blue. And then in blue, we open with a rather large gap higher. But again, if we're really bullish, yes, we open with a gap higher, and initially our bias for the first 30 minutes should be bearish. But if you're really bullish and price is willing to run towards a specific direction, then we expect to see price do so by you know, leaving the gap unfilled and not trading into consecutive encroachment, and that is exactly what happened here. So we opened with a gap higher and we continue trading towards the direction. This gap right here is a large gap, and you can see price trade down into it briefly, creating an institutional order flow and drill, and then we close above this down close candle. So that should act as a order block and to support price if we're in a bullish order flow. And you can see that happen here, and that is why I buy this order block right here. And if you look carefully, you can see each and every down close candle. This one supported price, this two supported price, this one supported price, and so forth. So it was a low resistance liquidity run higher. And that was pretty much a narrative behind the trade. And we get out at, about 100 points. And that would pretty much be it for today's trading. So good day and good trading.